Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. It's generally related to three different topics: wealth building, commodities, and/or financial topics. So I'm going to get in there, share my opinions on what people are sharing. If you want to follow me, it's at Finding_Finance on Twitter. And if you want to join our community, finding-value.com, that's where I dive deeper into all of these things that we're looking at on Twitter, a lot of the things that we're seeing on the technicals, and we're also looking for potential investment opportunities. That's the end goal for investment over the next 5 to 10 years. We do have a coupon code Mayday, which is active. You get 50% off the first month. You also get a larger discount going to the yearly membership if you're interested. So Katusa Research, current global silver supply is about 900 million ounces. By 2030, silver demand from solar panels is estimated to increase by 2.4x to 320 million ounces alone, representing 35% of current silver supply. There's silver demand 2023, and we rip higher, up, 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 up. Where's all this silver going to come from? Are the mines coming on fast enough to support the growth in just solar demand from solar panels? I don't know, but we'll find out. I do think that we're going to squeeze silver to the upside. Kevin says gold and silver bull markets are so powerful because people don't just greed buy, they fear buy. Watching your savings and wages deteriorate in front of your eyes while the price of goods you need go up week after week is psychologically traumatic. The herd is going to panic buy, and we aren't even close to that yet. The buy the dip generation is clueless as to what is coming. Get ready, baby. Strong dollar keeping everything in check. Something that I'm posting on here. This is the Brazilian real versus the US dollar. We have that three hump consolidation. We broke out, did a retest, and then we've been tracking sideways. Why? How? It's the strength of the dollar and the yields that continue to go up that are keeping these currencies down. Now, a lot of the commodity bull market is a play on a weaker dollar. And right now, the dollar's been strengthening. So we're not going to see emerging markets or maybe even commodities rip if the dollar is going vertical. I don't think that can happen. So what we're waiting for, this is the setup. We're waiting for pressure to build in the bond market. That pressure is shown as an increase in interest rates. The increase of interest rates is going to put a lot of pressure eventually on the dollar. But right now, we've got a stronger dollar. I get it. Okay. So this pressure is going to build in the bond market. And what you're going to watch is you're going to watch yields go up, 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 up. That's going to put pressure on the economy, the United States economy. It's also going to put pressure on interest payments. And we're going to print a bunch of money to cover those interest payments. And what could eventually occur is that pressure in the bond market, because it will put pressure on the economy, on unemployment, and all these different metrics that we follow. I think what they're going to do is they're going to transfer it to the currency markets. And what you're going to see in the currency markets is you'll see the dollar weaken, and you'll start to see these reverse higher. That will also bring commodities up because it's the dollar that's weakening. That's the play. As of right now, strong dollar's been pushing these things lower. We've been staying inside the pattern for a while, about 2 years inside this pattern. Australian dollar was about to break out and it came back within the pattern. It's because of the strong dollar and the yields going up behind the United States dollar. That's what's holding everything in check. And here's British pound already broke to the upside. It's just been held down from a strong dollar. So the strong dollar is holding this all, quote, in check. We're waiting for these pressures to release. Patience is required. TLT bond prices. This is where yields are the opposite of this. Price is coming down. Now, what do I see here? We have a move up, 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 an end of trend move with a shoulder, head, shoulder, neckline here. We've broken that. We've broken the uptrend line. We've broken that. We're playing with this support resistance area right where we're at today. This here is an upward facing pattern. It's squeezing upward, and we could break lower on bond prices. That means that interest rates could still break to the upside because this is bond prices. Bond prices break down, interest rates go up. But that's the big picture view on bond prices. I think this is an end of trend move of 40 years in 2020, and then we're going to head lower with bond prices. And that's going to put pressures on the market here in the short term if it does move on lower here. Freight futures, AM update, dry bulk, Capesize is up 1%, Panamax is flat, tankers, VLCC is up 1%, Suezmax is flat at this time. Giovanni says, the Ministry of Oil from Iraq announced today, Friday, that Iraq has reduced its production and downside to 3.3 million barrels per day. The ministry stated in a statement received by the Iraqi news agency that in line with the Republic of Iraq's commitment to the decision of OPEC and allied countries within the Joint Cooperation DOC regarding the voluntary reduction of oil production, we confirm that Iraq has reduced its production and reduced its oil exports to 3.3 million barrels per day, in addition to reducing local consumption. According to the statement, this reduction will continue during the coming months to ensure that production remains within the agreed limits and to compensate for the surplus produced in the past months, stressing that this measure aims to enhance balance and stability in the global markets. So 3.3 million reduction for Iraq. Cuppy saying he hasn't sold the share. What are we talking about here? So it says, holy cow, did Cuppy sell all of his AMARK? AMARK precious metals down 4.85%. Here's my opinions around this, guys. One quarterly earnings release doesn't make a long-term trend. Everybody gets so worried about every single earnings release. Half of these companies are cyclical throughout the year. So they have good quarters throughout the year. They have quarters that don't make as much money. Now, here's the question. Is the general thesis, is the trend that Cuppy presented in AMARK still intact? So what he thinks is that in the long term, eventually people in the United States and other areas will buy more physical metals because of the situation of the debt and that people are going to diversify away from bonds and away from potentially stocks even, depending on where interest rates go, et cetera, and that gold bullion sales will go up, physical demand. How does one earnings release impact that thesis? And then the answer is it doesn't. So why do people post this? What is the driving factor? And what response do they want to get out of this? Why are they posting this? Oh, is it because they missed one earnings call? I mean, someone asked me, like, this is a while back in one of the question and answer sessions. What annoys you? Like, what question or statement would annoy me? This does. This is annoying. It's not a question of, why did AMARK miss its earnings? Or, does this impact the thesis? It's a statement that says, holy cow, did Cuppy sell his AMARK shares because the price went down? This is like rudimentary investing. The people who are rookies use every single piece of information that ever comes about, earnings and everything. And if the company misses something, they're like, oh, it's time to sell. They didn't hit their earnings mark. And it's like, it's just dumb. Like, I just look at this and I'm like, what? It doesn't impact anything. And even if you're in like an oil company, if you have a high cost producer of oil or a high cost producer of silver, and let's say oil prices consolidate and they go lower from their highs, and then they come in and the oil company, which I mean, they can't predict exactly what the oil price will be. So if they go down and it's a high cost producer or any of the oil production companies, they're going to produce less earnings if the oil price goes down. I just see that as like really, really obvious. Now, if people can't figure out that an oil company that sells oil and the oil price moving lower is not going to translate into lower earnings outside of maybe like hedging programs, most of the time it's going to result in lower earnings no matter how good or bad the company is. And it doesn't matter if it's a high cost or low cost producer. The high cost producers are going to go down more because their margins are more sensitive to the increase and decrease of oil prices or silver prices or whatever it is. So when they say, well, why did they miss earnings? And you just look at the commodity price that's down 20% over the year or something. And I just shake my head. It's like, guys, this isn't that hard to figure out. Like this is really easy. And there's also times where oil price can go sideways and a company can have increased earnings per share. How does that occur? Well, if they're buying back a whole bunch of shares, they can increase their earnings per share. You're actually producing more oil per share as your share count declines. So I know Cuppy, he's been in Valeris for, I don't know, about since 2020, I think. Roughly, basically where I purchased some, other companies and shares, and he's been holding the entire time. I don't think he's a short-term trader. And if people are watching him and following him, they probably know that he's not a short-term trader, at least I would think. So I don't really like these posts. I think they're really, really annoying. I know it's not even labeled to me, but if you guys can't ride through anything, it's not, go back and look at most earnings of most companies over a long time frame. Not They don't go up quarter after quarter completely smooth every single quarter, especially commodity companies or companies that have cyclical selling pressures. So to like post this stuff, I just find it highly annoying. I feel like slapping this dude and be like, dude, wake up. Like don't be that guy. Don't be that guy that's, flaunting this in front of Cuppy or whoever. Northstar says if this happens, the stock market is likely to fall 50% or more. We were looking at this. He updated it. This is the uh, S&P 500 versus gold. We're starting to break down. We broke down this trend line here, but we got to break the horizontal here. And what he says is if when we get here, the capital rotation event is confirmed. So I guess we're in an unconfirmed breakout potentially, or it's not confirmed yet, but we can confirm it here hopefully very soon, in his opinion. Oh, I went on and did a thing with Fabi. If you guys want to hear that interview, go ahead and log in there. Here's QQQ textbook breakout to the downside. So we had a big selling pressure move, rising wedge coming up, and then we've broken to the downside. We could see selling pressure here in the NASDAQ and some of these other areas in the short term. We could see a pullback. Hedgehog Trader, silver breaking out versus the S&P 500 monthly chart. This looks pretty bullish. We've got kind of a double bottom here, right at 2000, 2001, and 2 on the left. and we've got another bottom forming here. We've got the downtrend line that's been broken, another downtrend line that's been broken, breakout retest, and it looks like we could be heading higher any second where silver starts to outperform the S&P 500. This is a ratio chart. So if silver goes sideways and the S&P 500 goes down, we still go up in this ratio. Just an FYI. And here's silver price on the bottom there. Giovanni says international oil rigs ex North America were at 709 in October. We're +3 month over month. We're -28 year over year on Baker Hughes. You can see the big move in rig count. We saw a huge move from 99 all the way up to about 2014. We've pulled on back, and we've been moving higher since 2020 with a recent pullback. I think we still have a good uptrend in progress for rig count. I do understand that they are drilling longer and longer laterals and horizontals. They're doing all this drilling that's going way out there, and they are getting a little bit more efficient at pulling oil out of the ground per hole drilled. But what I have heard recently in some areas, shale specifically, that the efficiency is starting to drop with some of that acreage. Just an FYI. Aaron says, I'm telling you folks, from a risk perspective, this is screaming DEFCON 1. Please, please be careful out there. So this is the S&P 500. And we're talking about, all these ratios breaking out against the S&P like gold and silver. This is going to get serious because when silver and gold outperform, that's generally when the stock market goes down. And right here, this is also further evidence that the top 10 stocks are at a record 37% of the S&P 500. At these market tops, you start to see the breadth shrink. And right now, we're seeing that breadth shrink to the top 5 stocks, record 37% in the S&P 500. That generally indicates potential tops in most of these cases. Investment wisdom, here's a quote. Market price is the price the stock is currently trading at. It is determined by supply and demand of sellers at a point in time and may have no relationship with private market or intrinsic value. That is value investing, and that's where you want to find the disconnect between the stock price or market cap and the intrinsic value of the company. But that's where I'm going to end it, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you like. And we'll catch you later. This is Finding Value.